Hello everyone, Maurice and welcome to Things Invest. Talk about investing, finance, and professional development. For today's items only, the investment top today will be Ethereum ticker ETH. First, just want to say happy Monday, everybody. Hope you had a great weekend, by the way. Respect to the Ethereum Russell records of 8:52 a.m. on the Eastern Time, currently $3,343. Basically, hovering on a sideways fashion, up about 0.01% so far. In respect to overall crypto market is up today because of Bitcoin dragging the whole entire crypto market to go up, breaking above the 50K level, hitting more than a 3 months high per our technical analysis so far. Another positive news that's been driving this specific crypto surge is another one coming from PayPal. As you know, PayPal recently, well, I wouldn't say recently, for about like 7 to 8 months so far now, they start to offer crypto purchasing or crypto exchange onto that platform. And it seems like they're launching their cryptocurrency service in the UK side of the house now, based on the article that came out from CNBC about 7 hours ago. And then some other news that's percolating again, and another reminder talk about Ethereum Rock JPEG, which is a format as a picture, a digital file, sells for $600,000. Obviously, as the NFC frenzy continues. Interesting, cultivations in the artistic community, I guess, right? And then another one coming from Decrypt, another regurgitation news talking about more than 70K of Ethereum has now been burnt since the EIP 1559, which is, the London hard fork that happened about 2 weeks ago, right? And then another article talks about Ethereum competitor Solana hits all-time high as the market continued to rise. So this article is really just a juxtaposition article, not really a persuasive one based on the read that I've read on the verbiage, specifically from the article from the author. So as we have seen, Solana has been surging up to, I believe, testing somewhere above like the $82 mark at one point in some of the exchanges. So extremely just mooning activity, if you may, right? And then the last one there you see here, again, this is something you've known already, is with respect to ProShares and VanEck, which are two fund managers, decide to withdraw their Ether ETF proposals. So obviously this is something that is more of a neutral news. We don't know if that's a good thing or a bad thing. It's just an exotic financial derivative products that they decide to pull out. It could be another form that they might be releasing or proposing to the SEC soon. So that's something we have to keep an eye out on to see how that's going to be shifting going forward. So with respect to the technical analysis that we see in front of us right now, we are still dragging up, and looking at the technicals, we are still overbought. MACD is slowly forming and fusing together because we are, been hovering on a sideways fashion despite the surge, right? But the surge again is minimal, right? It's mainly driven by the Bitcoin activities surging above 50K. And just to use the cheat sheet again, we know that we still are within the areas of denial, return to normal. And it seems like we are in between the bull trap and return to normal, which makes sense if you take a look at this right now, right? We are within this surge, this little V-shaped recovery, hoping that we are returning back to normal, right? Despite the sell-off that we've had, right? So I think it wouldn't be surprising to me if we are going to see some negative news foreshadowing in the coming days and weeks. And we know that with respect to the Jackson Hole speech that's coming out on 26th to 28th, I know it's like a 3 day event, but I believe the speech should be occurring on either a Thursday or Friday. I don't think Saturday would make sense. But we have to watch out because I don't really have a full agenda in front of me. But just keep that into your focus, knowing that we might see some rep pressure on Thursday and Friday because of what what investors are thinking that is going to be part of the verbiage, right? I think Jerome is going to obviously talk about some of the key topics with respect to quantitative tightening, tapering, right? And whenever we hear words like that on either progressions along tapering, conceptually means that they are going to be minimizing these monetary circulations in the financial ecosystem by stopping the printers, right? And when that happens, that will subsequently, firstly on a positive side of the spectrum, indicates that the economy is slowly coming back up. But on the negative side of the spectrum, it means that corporations need to find financial funding or cash flow somewhere else, right? And that could subsequently hinder the top line revenue or the top or the margin, if you may, because they just don't have that cash to support them like they used to be, right? There will also be cut off with respect to the stimulus checks that we've been getting so far, and that could be hindering into people's livelihood at the same time, right? And when that happens, that will correlate with the U.S. currencies, because as you stop printing money, the U.S. dollar will slowly appreciate, because that's just pure supply and demand logics, right? And when that happens, U.S. dollars will appreciate. And when that happens, people will start holding their cash to their heart or in the bank, because like, why would you want to invest in anything else when your dollar is appreciating by itself without doing anything? Then when you see that happens, people will start pull out of just basically across all asset classes, like from equity all the way to crypto as well, right? And that when that happens, we will see sell off across the board, right? And it's possible that we might see that happen, right? Because we know that tapering and quantitative tightening, it's important for us to, appreciate our U.S. dollar so it doesn't get further weakened. And it's something that we have, foreshadowed for quite some time now, right? Inflation is not something that is happening out of nowhere. It's supposed to happen gradually. Um, the money has to come from somewhere for the stimulus checks we've been getting and supporting these corporations from being belly flop for the last 1 year and 7 months or 8 months so far, right? So with respect to the sell-off that we'll be I foresee that we'll be seeing going forward after we pass the return to normal, we'll start to see fear and capitulation, and then despair, and we are within the blow-off phase, right? And these are the levels that I would be potentially buying at. Like 3,000 would be the first level if you want to swing trade for a short term. 2,750, 2,400. All right, just to recap on numbers and technical analysis again, right? The 3,000 would be the level that you want to ideally swing trade at, or as a bottom, because that's a relatively strong level. But again, it's not really a substantive technical analysis consolidation level. This is more just a flat number people typically buy it, right? The level that I will feel more comfortable will be 2,750, 2,450. But long term wise, if you're buying now, 9,800, 3.3 times your money from here. And that's pretty much it for the technicals for this morning. Hopefully this is helpful, and appreciate you. And I appreciate you. Hopefully you guys like this format as well. And feel free to give me any feedback, and feel free to give me a shout if you have any questions. Stay tuned and watch out for when this come up. Take care. Bye.